A media report suggested that US defence firm Lockheed Martin could be a potential white knight, whilst the CEO of BAE says VT Group is not something that you would necessarily want to own. So let's get more on this and what's going on today. We're joined by Dean Turner, Senior Equity Strategist at Barclays Wealth, and with us for the hour, Alpesh Patel, Principal at Profinian Group. Alpesh, how much confidence do you take from the fact there is, M&A stories running now?
Well, there are and there aren't, in the sense that, yes, we're starting off from a very low base, but in terms of, are you seeing a mad rush? Are you seeing...
Well, I suppose something's better than nothing, right? When we had Cadbury's was already gone, there's now this...
Yeah, I don't think we want to get overly optimistic, and I think there's still a lot of concern out there in the markets. Yes, it's good that there is some things coming out. I mean, I did say, I think a few months ago on the show, that given the low value, or relatively low value of the pound, you're going to get more foreign acquisitions of British companies, and we saw that obviously with Cadbury's, and that's been one factor, and obviously with share prices having dipped a fair bit. But I think now I'm getting the impression companies are taking their foot off the pedal slightly in terms of looking at acquisitions, partly because they see, yes, there are some valuation benefits on the falling currency, but in terms of earnings outlooks, things are starting to get murky again, so I think they're getting a little bit more cautious. Carsten, it's Alpesh in the studio. You mentioned service, so you're looking to compete on quality against the downward pricing pressures, but obviously competing on service and quality is very expensive. Are you inevitably not going to be having a losing battle on that?
No, I'm not sharing this at all, because, today, if you look at our price premium of 30%, we're able to sustain it for years now already and are gaining more and more market shares. If you would imagine that we would abandon this price premium just by cutting our service advantages, this would not be a winning battle on the value side. Look at our margin in the street comparison. This margin is extremely high, driven by the high market shares, driven by the service differentiation.
Carsten, in terms of, again, going back to how do you improve that bottom line, are you looking at overseas expansion, or is this just a case of hankering down and focusing on core competences?
We are present in two markets today, Switzerland, which is a shrinking business, and Italy, which is a growing business. And we will continue over the next years to focus on these two markets.
Yeah, so I mean, you own Fastweb, the broadband operator. I mean, that was part of a strategy, I guess, to counter this growth at home. Will you return to that theme?
Yes.
Will you return to that theme, though, and say, look, we need to have more overseas operations like Fastweb or expand Fastweb?
Our focus is going to be on Switzerland and on Italy, which means that if we see options to strengthen our position in the value chain in Switzerland, or if we see options to strengthen our position in the fixed line market in Italy, we will examine these options and decide upon them.
I don't know, Alpesh, I just feel at the moment the tax message is just wrong, right? It's not, there's no encouragement for whether it's an overseas company, overseas investor, or for someone already working in this country to go out and try and invest and create growth.
You're absolutely right. The focus is most definitely not on encouraging long-term investment through fiscal policy as things stand. The focus is very much on, we're in a hole, how do we get out of this? My concerns, and the question I put to John is, what do you see the impact for the next 12 months on sterling as a result of this, as a currency? Are we undervalued, overvalued, rightly valued as things stand in terms of the currency?
Well, I mean, I think that sterling has been relatively weak for some time, and I think that's a good thing. And I think that so long as we get a credible fiscal plan in place, then that should allow interest rates to stay low for longer and should keep sterling at a relatively competitive level and hopefully support an export-led recovery, which I think is the kind of recovery we want to get over the next 2 or 3 years. So hopefully sterling will remain at or around current fairly competitive levels, but that does depend a lot on what happens to fiscal policy and therefore to interest rates.
John, one of the debates, which is going to obviously be an electoral debate, is how quickly fiscal tightening occurs. We saw letters in the press by economists, leading economists over the weekend. Are you in the camp of that tax rate should be raised and spending cut very urgently, or are you more in the Labour camp of, and the old Keynesian camp of let's wait and see?
Well, I'm not in the political camp, but I mean, my view is that we're barely crawling out of recession. You don't really want to hit the economy with big tax rises in 2010. So I think the real action on this would probably start, from 2011 onwards. But I think once you get started from 2011, assuming the economy is by then on a recovery path,